The weekly dividend ETF just keep increasing, and now we have MAGY, the newest weekly payer by RoundHill ETFs. Now, I'm really excited about this one. You guys know I'm a big fan of YMAG, and this is RoundHill's version MAGY, which is the RoundHill Magnificent 7 Covered Call ETF. But there's a few differences that I want to mention between these two that I think you guys are going to want to know about. If you're a big fan of YMAG, this one might just be for you. So if you guys know anything about the channel, I talk all about dividend investing, making money in the stock market. So if that's something that you're interested in learning more about for free, don't forget to like the video and to subscribe so you never miss a future update. I'm super pumped about this video. It's going to be packed full of information for you guys. So let's get it started by rolling that intro. As all very experienced investors do, I went to Twitter, or X, to find out all the information on MAGY. And I'll be honest, I used to think, oh, it's stupid using something like social media for info, but RoundHill posts on here all the time. So does YieldMax. I think Defiance does as well. So, I mean, also I post on here every once in a while. I need to post more. I'm bad at it. So if you guys are interested, I'll link my Twitter somewhere down below. But I have too many links in all these videos now, so I just get confused, and I usually just get lazy and don't put any of them in. So Spencer Invests on Twitter if you're interested. But check it out. RoundHill, pretty solid, almost 30K followers. People like seeing exactly what they're doing. I'm following them, and we can see now trading MAGY. Now, I always like to look through some of the comments on here because I mean, it's so interesting what people are asking for. And I know you're probably like, oh, why would you read the comments about what people are saying? Why does it matter? Well, you really want to know what people are buying. And so, I mean, you can see some people, Ashton Invest on here saying SoFi, Amazon, Google, AMD. These are long-term stocks that make investors happy. HIMS has been doing really insane. Google after those earnings, not a whole lot on this one specifically, but, you know, 3 comments total, some spam and some ads. We're still learning a little bit of information. So we're going to go over to the RoundHill website and see all what MAGY is about. And I'm really excited. I will explain the differences between YMAG and MAGY because there are a few key ones that I think will make a difference in your overall return and which one you'd want to hold. We can see the full rundown on the ETF so far. So let's talk about it. We don't know the distribution rate. It's only been trading for about 2 days. I am trying to talk slower and really enunciate so you guys can see. And I will put the ticker up on the screen for those of you that maybe are watching from your phones because it's a little bit easier to see. But ticker MAGY, that's our ticker. And we can see, why would you like to buy MAGY? Well, MAGY seeks to generate weekly income through a covered call strategy on the RoundHill Magnificent 7 ETF. We are going to look at that ETF in just a moment just to see the price history of it because it's been relatively phenomenal, I will say. I'm not sure. I haven't looked at it in a couple weeks now, and this crazy market might have slowed it down. We have precise exposure. MAGY offers precise exposure to the Magnificent 7 subject to a weekly cap. And now, one thing I really like about this idea is the weekly cap. Well, typically stocks this large, I mean, except for Tesla, which is one of the Mag 7, don't run substantially week to week. They're pretty consistent. And with that consistency and growth, I would say, as long as the overall market performs well, you're able to really do well with options on it because you can relatively predict, of course, like I said, unless we have an insane week, good or bad, it's easier to predict how these stocks are going to do. Because if you think about it, just percentage wise, you have to have a lot of investors or people that have a ton of money in these stocks to sell them, to buy in, to really sway what's happening, right? And so aside from earnings and things, it makes a lot of sense to have a covered call strategy on a very consistent ETF. And even though there is only 7, being 7, you are a little more diversified. It's actively managed and implements a covered call strategy, saving investors the time and expense of trading options themselves. I'm a big fan of that. I've done options trading myself, and it's just not my thing. I wouldn't say I was good. I wouldn't say I was bad. I was relatively average. I ran the wheel on some things. Maybe I'll do it again someday, but it just takes a lot of time and research, and I'm very lazy, to be honest. That's why I'm a dividend investor. I don't want to work for my money. Isn't that the whole point of dividend investing? You know, anyways. One thing, too, is the expense ratio is kind of insane. We have a gross expense ratio of 1.28% and a net expense ratio of 0.99. Now, when we compare this exactly to YMAG, I think they're the same exact expense ratio, which is probably targeted. They were probably intending to do that, so you'd still pick between the two. I don't know if that's the best idea, but maybe I'll pull theirs up and show you guys on the screen so you can see exactly what it is because that's a big factor. Expense ratio does matter. It is a little bit complicated too. I don't like expense ratio stuff. Like we've seen some, I have some that are like 0.03 and then some that are 1.3. It's like, holy smokes. The difference is insane. We can see the only holding is MAGS, which is the ticker for RoundHill's Magnificent 7 ETF. We don't have anything on performance yet. I will say the price has started out pretty high at about $53. We'll check the price, but there's only been about 2 days of it, so it's not going to give us much. But I am really happy that the fact that because of the fact that RoundHill is listening to investors. They've seen YMAG do well. They're going to try their own hand at it with their own ETF that has performed extremely well. And that's the big factor here. The underlying difference between YMAG and MAGY has the MAGY or the MAGS ETF outperformed each individual ETF that we see that YMAG holds. And I think it has, because it has been absolutely phenomenal. So let's take a look. Before I forget, I pulled up YMAG. There's a few things we need to talk about. Dividends, blah, 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 all the same details. But the main thing, the expense ratio is the same. Management fees, 0.29%. Acquired fees, blah, 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 0.99%. So it's a 1.28% expense ratio. But the difference is what they're holding. So if you don't know, YMAG is just an accumulation of the MAG 7 ETFs that, this is hard to explain, of the YieldMax ETFs that write options on the Magnificent 7 ETF. So we have YieldMax, YieldMax Tesla, Amazon, Microsoft, Apple, Google, Nvidia, Meta, and then this is just where their extra cash goes, which is interesting. So if like YieldMax starts doing a lot worse, or if volatility falls and isn't doing as well, how are these going to all compare in their price appreciation and overall value to the MAG 7 ETF? Because that's what we're going to look at next. And that's what makes me very interested in MAGY over YMAG, because the MAG 7 ETF has done extremely well by RoundHill. So let's take a look. There is a lot of good news when it comes to the MAGS ETF that I will say. I don't own this one yet, but I probably should. And I wonder how it compares to like QQQ, to SCHD, to VOO, all really phenomenal growth ETFs. Well, MAGS offers pure exposure to the Magnificent 7 stocks. It's designed with both investors and traders in mind, seeking to offer similar tax efficiency to a traditionally managed ETF, which is great. And it's rebalanced to equal weight on a quarterly basis. Good details. Important. We see the expense ratio is low, 0.29, in comparison to the weekly payers, but we're paying for extra weekly income, right? So here we have it. Microsoft is 15%, Alphabet or Google is 14.5%, Apple 14.5%, Tesla 14.5%, Amazon a little over 14%, Nvidia 13.5%, and Meta 13.3%. Now, look at this price history. Absolutely insane. So start off at 24. At the high, it got all the way up to 57, and now we've pulled back. It pulled back to a low of 41, but it's already back up to 45. So you're still looking at some really solid upside from this ETF, which I'm really happy about. That's what I want to see, is some good upside. Now, is MAGS going to hold up better than the YieldMax individual ETFs like tsly, AMZY? And I think that it would. I really think that it would. One, the market cap is massive, $1.82 billion. I don't know if any of the actual, I guess I could check. Okay, I checked. And consistently, they range from a little over $1 billion to a little under $1 billion. So they are still pretty large. I will say that. This is not as, it doesn't have the size gap on it. I thought that they would, but there you go. We learned something new. I will be buying MAGY in the weekly account for those of you that are interested in seeing how it performs. What I do over there is I buy each of these. I put $100 in. I track the amount of dividends paid out. I might turn drip on for MAGY, which could be super cool to see it continue to grow. And that's the goal, is just to be informative and educate people on how these funds are actually performing using my own money. Now, I know that's risky to put my money where my mouth is for something like a YouTube channel, but it's really fun, and I think people enjoy it, so I will keep doing that. But all in all, it's very, very solid of a fund. I think MAGY could have some really good potential. Is it going to uproot YMAG? I don't know. YMAG is down about 4% in the account since we purchased it 28 weeks ago. I've done 28 updates on that. But all in all, I think that because the MAGS ETF is going to hold up price appreciation wise better. It doesn't pay a dividend. It's not going to consistently fall. There's no real threat of NAV erosion, in my opinion, compared to each of the individual YieldMax funds. Tesla's beaten up. Coney's beaten up. I mean, what? NVDY is beaten up. They all have charts trending downward, which I don't love. So I think this is a better option. And I'm saying that now with no evidence yet, it's all based off a hunch that I have about this ETF, but I am very excited, as you guys can see. And of course, it's Friday, so I'm super excited. We have the weekend. Last but not least, the prospectus for MAGY is out. So I recommend you guys, if you're interested, go check these out. The prospectus has a bunch of information on here: management, how to buy and sell, the dividends, the NAV, all the information that you're ever going to need on here. And this is where they really announce a lot of what's going on. So they'll file this with the SEC. It has to get approved. This one already is approved because it's already trading. And so this is where all the data on the fund is. And again, it all has to get approved. All the risk management is in here because these weekly paying ETFs are higher risk for sure. And you want to know what you're getting yourself into as an investor. So I really do recommend it. They've got concentration risk, liquidity risk in here, tons of scary words, but it's stuff that we need to know as active dividend investors and just investors overall in the stock market. Of course, none of this is financial advice, but I'd say go check it out. Thank you guys so much for watching. If you're interested in tracking all of my challenges on YouTube, check the link down below to download the Blossom app. It's totally free. It's free to sign up. It's a really cool investing type social media that I'll be using to showcase what each thing I buy, the price at, what its actual return is, the dividends, all the good information is on there for you guys, again, for free. And of course, if you haven't checked out the interview with Ari Gutman that I did, absolutely phenomenal watch for those of you that want to know more about me and my investing style and how I got here and my journey, which may bore some of you. I'll be honest, I'm not the most interesting human being, but some of you might enjoy it. So if you want to, go check that out and give a like to Ari for me. He's an absolutely great guy. So thank you guys so much for watching, supporting the channel. I would be nowhere without you, and I hope you guys know that. I'm really, really appreciative of you, and I'm going to keep the content coming. Thank you so much for watching. Hope to see you in the next video.